Okay, so this is my funded account strategy. This is how I personally approach prop firms. So first I have my setup. So this is my London Kill Zone liquidity sweep. This is my A plus setup. So with this setup I want to see London sweep the Asian range and CBDR liquidity into a 4-hour, 1-hour or 15-minute PD array. So say if there's an order block above the Asian range and I see obvious equal highs, I'm going to set a limit order above that liquidity on the order block if I'm bearish on the day. So that's simple. So I want to see a rally from 12 a.m. New York. I'm paying attention to what 12 a.m. does going into London Open. So for this, my CBDR has to be less than 40 pips, Asian range 20 to 30 pips ideally, not more than 30 pips. So I want to enter from 2 a.m. to 4 a.m. New York. If I see price trading up into the order block and I'm seeing some reaction off of that just before London Open, so just before 2 a.m., or I had a limit order there and price trades up into that order block as a reaction, it's okay, I can take that setup. But usually I'm not going to enter just because it's 2 a.m. I want to see actual liquidity being taken and a PD array being traded to. So for my standard deviations, I use 1 to 2 standard deviations of the CBDR as the ideal. So this isn't a necessity, it's just an extra confluence. So this is my A plus setup. So this is my delayed London protraction setup. So this may or may not have a favorable CBDR. So usually when I see this setup play out, I see the CBDR trending in one direction. So for this, I look for price to trade into a 1-hour or 15-minute PD array shortly after 2 a.m. So if I'm seeing an order block within the 12 a.m. rally and I'm bullish on the day and I'm expecting London to just retrace back down to it and then continue up, then this is the setup I take. So this has to be in alignment with my daily bias and justified to the weekly profile. So what that means is if I saw Monday and Tuesday trade lower, take liquidity, and I saw Wednesday have a reversal and there's an objective to be traded to, say there's just a fair value gap or liquidity equal highs in Monday's price range. So if I'm expecting Thursday to be bullish and I see 12 a.m. rally and then leave an order block within that range, I'm gonna expect London to retrace back into that and then continue up. So this setup I take with some discretion. If it's not obvious in price, I'm not going to take the trade. I just sit out, wait to see what plays out, and then continue just the next day or the next week. So this is my delayed London protraction setup. So my general parameters, minimum 10 pip stop loss. I know 10 pips isn't a lot, but I'm just trading a small range usually. So just giving price some room to breathe. If there's a high or something I want to put my stop on and it's more than 10 pips, I'll just do that. But if there's a high and it's less than 10 pips, I'll just move it up to 10 pips just so price has a little room to breathe. So my entries are always at 2 a.m. to 4 a.m. New York time. So London session is 2 a.m. to 5 a.m. But I'm not going to be taking a setup too late into London session since that's just what I'm trading. I'm not going to be relying on New York continuation too much because New York can just reverse, then I don't really want to be in that. So if I don't see a setup forming by 4 a.m., I'm not going to take the trade. And I explained before, if I see price trading into my setup just before 2 a.m., like 5 minutes before, I can take that still. So 1 to 2 risk to reward, that's just what I stick to. It's simple, easy to keep track of wins, losses, and my profits with that. So when I'm taking a 1 to 2 and I see maybe equal lows just below my targets, then that's safe. I'm just going to keep it like that. But if there's lows just above my targets, I'll set an alert there, and then if price takes those lows, then I'll just move my stop loss to break even or maybe take a partial. So with this, usually it lets me target the Asian range low, but if it doesn't and I'm expecting the day just to be bearish anyway, say I'm taking a short, then 1 to 2 risk reward is usually just safe. That's what I stick to. and then 1 loss and 1 win per day. So since I'm trading 1 session, I usually just stick to 1 win, 1 loss per day. I don't want to get in after, because if I'm taking the loss, then London's usually going to be over pretty much, and then I'll be going into trading New York. So I just stick to 1 win, 1 loss per day. So my equity with my risk parameters, when my equity is 0 to 2%, I risk 0.5%. And when my equity is above 2% and I have a buffer on the account, then I'll risk 1%. But if I go down below 2% again, I'll go back to risking 0.5 until I get out of that and get back above 2%. So this just makes the drawdown a lot slower and just slows the drawdown curve, and then makes the risk management just a lot easier. Like, I have to take a lot of losses in a row to blow the account, so just take it slow. When I'm above 2%, then I see it starts speeding up, and then easy, I have a buffer, I can't really lose the accounts. And if I'm risking 0.5, I have to lose a lot in a row, obviously, to lose the account with a 10% drawdown. So then after that is my top-down analysis. So this is how I get my bias. So I go from monthly top-down, weekly top-down, daily top-down, and intraday execution. So with my monthly top-down, this is my monthly bias. I do seasonal tendency, quarterly shifts, interest rate differentials, market profile, intermarket analysis, market structure, PD array matrix, and key price levels. So I do this on a monthly basis at the beginning of each new month. So this just gives me a monthly bias to work with. So just because I have a monthly bias doesn't mean I'm going to be selling every day. I need to work within the weekly and the daily, and then within the weekly profile and daily profile. So my weekly top-down, I do COT analysis, retail market sentiments, market profile, intermarket analysis, market structure, PD array matrix, key price levels, and I do this on a weekly basis. So this just gives me another bias. If I'm seeing my weekly and monthly in alignment, and my daily as well, that's high probability setups, I'm just gonna have to operate within the daily profile, weekly profile to take my entries. So then daily top-down, COT, institutional order flow, intermarket analysis, market structure, PD array matrix, and weekly profile. So I do this on a daily basis, either the night before or just before London Open. So this usually takes like 30 minutes max. So I usually just do this in the morning before London Open. So this, it's quick. I can just do this, like 30 minutes max, just to get a daily bias. So if I see my monthly, weekly, daily in agreement, and then I see my daily profile playing out within the weekly profile the way I'm expecting it to, that's my high probability setups. And on top of that, if I see an Asian range liquidity sweep into a order block or just a PD array, then that's my A+ high probability setups. I'm going to take that setup. So then after I get my daily bias, I already have my monthly and weekly bias. I just follow my parameters for the intraday execution. So I'm just trading London session. So if London's over, I'm not even looking at the charts. I'm just getting in and out in London. If London doesn't reach my targets and I'm already traded close to my targets and I'm expecting New York to continue, I'll just let it run into New York. If I'm expecting New York to reverse and my target's not hit, I'll just close in profit and then leave it for the day. That's fine. So this is my funded account strategy. This is what I use to approach prop firms.